First and foremost, UAW's Shawn Fain. Shawn Fain got some stuff to say, y'all.
All right, welcome back. So the UAW now has a new target, and it is none other, at least in part, than the world's wealthiest man, Elon Musk. Now, fresh off victories in negotiations with the big three automakers, the UAW is now trying to unionize the entire non-union auto sector. That would include some popular and well-driven brands like Toyota, Volkswagen, and Tesla. What do you make of this?
Yes, do it.
From the Democrats' view.
Look, my dad was a Teamster. My teeth are straight because my dad was a Teamster, right?
Okay.
And I think that the unions have brought middle class to the entire country. And I think Elon Musk has had too good of a life up till now. Let him have to fight this fight, which he's going to lose, by the way. Because
I'm not sure this is an Elon story, though,
no,
because when you look at the UAW, it was something like 1.5 million workers.
This man said Elon Musk has had too good of a life up till now. Elon Musk has had too good of a life up till now. I've never subscribed to the idea of haterism or people looking to come up off of you because they don't like what it is that you have. I have never heard of such a mindset growing up, and that wasn't really a thing until I got on the internet. I'm going to be real with you. I have never heard anybody in my life say that somebody else has had too good of a life up till now, and so that's why they want to unionize, or that's why they want to take over, or that's why they want to go and do whatever it is that they want to do. But the UAW launches an unprecedented push and organize 13 automakers in the U.S., outside of the big three, obviously. After winning record labor contracts this month with the Detroit 3 companies, the United Auto Workers is now taking on all non-union automakers operated in the United States in a massive, unprecedented public organizing campaign. I told y'all that this is what the play was. This is why they spent so much time advocating for promoting and doing all of this Facebook Lives and YouTube Lives and all of this stuff. They spent a lot of time promoting and getting the visibility behind it because the goal wasn't necessarily just to get a record contract. The goal was to look forward to grow the organization, considering that they're not necessarily growing, they're preserving jobs, and that the union is at its lowest membership in a long time. And so as a result, they were looking to get visibility into the other automakers across the United States of America. And they weren't talking to us. They were not talking to the union membership when they were doing these lives. Shawn Fain was talking to auto workers at other non-union workplaces, including Toyota, Honda, Tesla, and everybody else. So you got to look at the play. The play is never what's directly in front of you. The play is what's in front of them. The play is never what's directly in front of you. It's what's in front of them. They said on Wednesday, the UAW said workers at more than a dozen non-union automakers across the United States have announced simultaneous campaigns to join the UAW. That means thousands of non-union workers are signing cards at the new UAW webpage, uaw.org/join, and are publicly organizing to join the UAW, the union said in a news release. The organizing drive will cover nearly 150,000 auto workers across 13 automakers in the release. That was the goal. Shout out to Buy FM. Yep, that was the goal. The goal was never to necessarily get you guys a 46% pay raise that they said that they was going to get. The goal was to unionize at other automakers in order to continue to boost the ranks of the UAW itself. Now, considering that, Ford is saying that they have to add, and this is what they announced to shareholders this week. They said that they're adding $8.8 billion in additional costs because of the 2023 UAW contract, and then they revealed the plans to be able to pay for it.
Ford joining GM and issuing new guidance to Wall Street. Phil LeBeau is here, and he's got the details on that. Hi, Phil.
Hey, Becky, this is new guidance from Ford for 2023. Remember, it pulled guidance once the UAW strike was going on because of the uncertainty of what the full cost impact would be. Well, now that they have that, Ford is saying that for the full year, its adjusted EBIT profit forecast, what it expects to earn, will be in the range of $10 to $10.5 billion. Before it pulled its guidance, Ford's estimate for full-year EBIT profit was 11 to 12 billion, so obviously coming down a little bit. Adjusted free cash flow for the year will be coming in between $5 and $5.5 billion. Just for a point of reference, it was $9.1 billion last year.
So ideally, guidance has already been cut, partially because the impact that comes along with dealing with the union and the UAW. When they go on to elaborate, and they said that its labor costs in North America will increase by $8.8 billion over the life of the contract due to gross wages, accelerated wage progression for workers, and cost of living adjustments. It's called COLA. They go on to say the cost effect is anticipated to be about $900 per vehicle in 2028, which Ford will work to offset through higher productivity and lower expenses. Ford said in a news release, renewing its vow to cut costs by also improving quality and identifying new sources of revenue, meaning that they're going to be feeing y'all to death and they're going to be trying to pass this over into the consumer without it being too obvious, in addition to possibly laying some people off, probably white-collar workers. Ford released the information early Thursday prior to the opening of the stock market. Ford Chief Financial Officer is scheduled to discuss the company's growth plan at the Barclays Global Automotive and Mobility Tech Conference later Thursday morning. They did not specify how higher labor costs would impact consumer costs, but Ford spokesman said that the cost is simply not transferred to the retail price. All right, not yet. Right. Conversely, this was a stock play that I actually shared with you guys. General Motors announced a stock buyback.
General Motors providing some guidance for the first time since the UAW strike. We want to get right to Phil LeBeau. He's got the latest on this. Phil?
Becky, take a look at shares of General Motors moving higher as the company announces new guidance for 2023, not dramatically different than the previous guidance, which it pulled during the UAW strike, and also some shareholder actions. Let's start first off with the new guidance. Full year EBIT adjusted earnings of $11.7 to $12.7 billion. Previous guidance was $12 to $14 billion. The EPS, EBIT adjusted, or the adjusted EPS for the full year, $7.20 to $7.70 a share. The street right now is at $7.45. Previous guidance was $7.15 to $8.15 a share. Auto free cash flow of $10.5 to $11.5 billion. Previous guidance was $7 to $9 billion. The company is also estimating that the full EBIT adjusted impact of the UAW strike is $1.1 billion. Now to another reason why shares are moving higher. General Motors deciding, you know what? We paid the union, and now it's time to pay the shareholders. This is a big move. A $10 billion accelerated stock repurchase program is being announced. $6.8 billion of GM shares immediately retired. I did the math. Depending on where they settle out on the trades, it's going to be about 17% of the float that's out there right now. 33% increase in dividend. The quarterly dividend up 3 cents a share, going to 12 cents a share in 2024 in the first quarter. Big moves by.
So, Mary Barra has continued to try to increase the share price, which the stock is up significantly. I actually sold this morning. So I sold it, and then I put the rest of the shares that I made, or the significant profit that I made over at GM when you guys see me buy my GM stock, and then I put that back over to Rivian. So we'll see how that plays out. But GM is basically offering a $10 billion share buyback. It's the automaker's biggest ever stock buyback plan. And Chief Executive Officer, CEO Mary Barra promised better days are ahead, and GM also boosted its dividend by 33% and reinstated earnings guidance after accounting for costs on its new labor contract. All right, so long story short, they're still trying to work on what is in the best interest of the shareholders, which is the owners of the stock, and hopefully we continue to benefit from it as far as the investors. I have divested my entire position inside of GM, and then I've actually allocated that over into Rivian because I like what Rivian is doing. I am not telling you what to do. I am just telling you what it is that I'm doing as far as what my long-term play is, because I see more value in Rivian than I see, or upside in Rivian than I see currently with General Motors, especially what they have to deal with in the future. Remember, everything that we do from an investment perspective is based off of a long-term 8 to 10-year view, not necessarily what's happening short term. So I took my profits and the profitability that came along with investing in GM shares, and then we pulled that out, and then we're going to reallocate that to whatever it is that we think is the most important thing for us to allocate that to as far as our long-term perspectives and investments. All right.